episode 1 of the P2P Connects Us podcast. Today is September 12th, 2014, and I'm your host, John Light. On today's episode, we're going to be talking about Uber's explosive growth, Coinbase's expansion into Europe, an exciting partner announcement, the Bank of England embraces cryptocurrency, and last but certainly not least, David Schwartz of Ripple Labs joins the show to tell us about consensus and the Ripple protocol. Hello, and welcome once again to episode 1 of the P2P Connects Us podcast. Before we get to the news, I have some announcements and listener feedback to share with you. Next month, I'll be speaking at the Coins in the Kingdom conference, which is taking place October 4th through 6th in Orlando, Florida. Tickets to the conference are just $60. Kids 12 and under get in free. And for an extra $100 per person, you can be a part of the Bitcoin invasion of the Magic Kingdom at Disney World after the conference on Monday the 6th. For more information, you can go to coinsinthekingdom.com or just click the link labeled Coins in the Kingdom in the show notes. I would also like to announce that I am now accepting offers for sponsorships of this podcast. If you have a P2P project that you think our audience should know about and would like to show your support for the show, please get in touch through the contact page on my website at p2pconnects.us. Speaking of getting in touch, I got a lot of great feedback from listeners of the pilot episode. Thank you everyone who wrote in. Daniel heard my comment in the last episode about sharing economy workers getting shares in the companies they use to find work and writes in to say, quote, "Why should they get shares? Was that in the agreement they made? Typically, if you want shares in a company, you buy them. It's an absurd notion that workers have rights, that they are entitled to nice things, specifically that they get shares for free," unquote. First, I do think that workers have rights, and those are whatever rights that they and their employers have contractually agreed to. Second, I didn't say that they should get shares for free. I suggested that the companies give shares to workers based on the number of jobs that they've completed using their specific platform. After giving it some thought, I realized that there is some potential for this to be gamed by 2 or more workers who know each other to just do jobs for each other over and over to get shares for little to no effort. But of course, it's a challenge in any kind of environment where you're incentivizing people with little oversight to make sure that the job is actually getting done properly, that no one's being defrauded and compensation is still being remunerated as the workers deserve for the work that they've done. But where there's a will, there's a way. And for me, something just doesn't seem right about investors and early employers at these startups making tons of money off their shares while the people who actually give value to the networks just get an hourly wage, if that. That said, sharing economy companies have helped a lot of people who would otherwise be or underemployed, and I think this is something to be applauded. Certainly credit where it's due. Some sharing economy companies are already doing a lot to help their peers thrive in the peer-to-peer economy, such as collective bargaining for workers' benefits, providing insurance in case of a dispute, and even defending peers from attacks by law enforcement and regulators. So, hats off to these efforts. I'm just advocating that these companies continue to think of ways to put their millions or even billions in profits to work for the people who give their networks value. Daniel also says, quote, "Bitcoin and the brand of socialism you advocate are mutually exclusive," unquote. I just thought I'd include this quote because it's interesting. To an extent, I won't deny this. The value of the Bitcoin token is at least partially predicated on the notion of scarcity, and artificial scarcity at that. And this is a notion that I think will be less and less relevant as we move towards a post-scarcity world, which I truly believe is achievable within this century. But of course, that's a whole other discussion that we're going to have to save for a future episode of the podcast. All that said, I think Bitcoin is an amazing tool for storing and transferring value digitally without an intermediary or counterparty risk. And I think that cryptocurrency will continue to play an important role in the transition to a peer-to-peer economy. So thanks a lot, Daniel, for these great comments. I received a few requests in the comments section on Let's Talk Bitcoin to upload the podcast to SoundCloud. The SoundCloud Pro accounts, which are required for more than 6 hours of audio, are $15 a month. So to help make this effort sustainable, if I get at least $5 worth of Bitcoin tips per episode for the next month, then I will start uploading to SoundCloud. And as I mentioned, I am now accepting offers for sponsorships of the show. So if you would like to help offset some of the costs associated with producing P2P Connects Us, you can get in touch with me through my website. I'll also look into signing up for a Patreon account for people who want to subscribe and tip using fiat currency. In the meantime, if you're having any trouble streaming from WordPress, where everything is currently hosted, you can download the episode and listen to it locally, then everything should play smoothly. I also got several requests for the magic word feature of Let's Talk Bitcoin, and I'm happy to announce that if my efforts here are successful, the magic word Ripple should be good for a few LTB coin this episode. Again, that magic word is Ripple. R-I-P-P-L-E, Ripple. Thanks everyone who commented on the pilot episode. Your feedback helped me decide that this podcast is a good use of my time, and I'm excited to continue the conversation with you. And you can join the conversation if you haven't already by creating an account at letstalkbitcoin.com and leaving your feedback in the comments section for each episode that's posted there. If you'd like to earn LTB coin for your engagement, instructions for participating in the LTB coin program can be found at ltbcoin.com. Today's top story comes to us straight from the CEO of Uber, who announced at the recent TechCrunch Disrupt conference in San Francisco that the company has, quote, hundreds of thousands of partners from over 200 cities and 45 countries around the world connected to the platform. A Mashable reporter later confirmed this with a company spokesperson who added, quote, at its current rate, the Uber platform is generating 50,000 new driver jobs around the world every month, up from 20,000 in May, unquote. These are quite impressive numbers for a company that is just 5 years old, and shows just how powerful networks can be. In related news, Uber recently opened their API for developers to build on and already have an extensive list of partners including Expensify, Hyatt Hotels and Resorts, Starbucks Coffee Company, TripAdvisor, and United Airlines. The API gives developers access to many of the primitives that power the Uber app, such as passing a destination address to the Uber app, displaying pickup times, providing fare estimates, and more. Andrew Leonard at Salon says, quote, Uber must be stopped, unquote, fearing that the company could become a monopoly if it continues to be so successful. While I highly doubt that Uber will ever become a monopoly, especially with competition from truly peer-to-peer marketplaces like OpenBazaar, I do think that with this move by Uber to open their API to developers, we could see the company creeping into more and more aspects of our lives. Much the same way that Google started just as a search engine, but ended up in seemingly every facet of our online lives, from email to reading, watching videos, and even shopping. Something to keep in mind with Uber, or any of these sharing economy services really, is that there's basically no privacy. You have to pay with a credit card, you have to give them your name, sometimes even a phone number, and there can even be identity verification or background checks involved depending on what you want to do. All of these measures are most likely for risk management purposes, so not exactly malicious or trying to get in your business for no reason. It's just something to keep in mind if you prefer privacy over convenience. And on the topic of trading privacy for convenience, Coinbase recently announced that they were expanding their Bitcoin brokerage service to 13 countries in Europe. Coinbase was one of the first companies in the United States to allow customers to buy and sell Bitcoins with a bank account or credit card. But as a trade-off for this convenience, a customer must first go through an extensive identity verification process for regulatory compliance purposes. This is contrasted with the experience of using less convenient but far more private services like localbitcoins.com or the new local trader feature that was added to the Mycelium Bitcoin wallet, or even attending meetups such as Buttonwood or Satoshi Square, where all you need is a pseudonym to trade with people in your area. Coinbase's expansion announcement comes hot on the heels of the news that Coinbase has partnered with PayPal's Braintree subsidiary, enabling all merchants with a Braintree account to accept Bitcoin payments through Coinbase. At TechCrunch Disrupt, Braintree CEO said, quote, "This is PayPal making a move to embrace Bitcoin," unquote. Braintree currently works with thousands of companies, including Airbnb, TaskRabbit, and Uber. Also notable in the world of Bitcoin, the Central Bank of England recently released 2 research papers on the topic of peer-to-peer digital currency systems, both of which look at the technology in a positive light. One of the key quotes to come out of the research says, quote, "Much of the media focus to date has been on the new currencies themselves, such as Bitcoins, and the large price swings that these have experienced. However, the key innovation of digital currencies is the distributed ledger, which allows a payment system to operate in an entirely decentralized way without intermediaries such as banks," unquote. Personally, I think a currency that can't be inflated at will is a pretty important innovation, but certainly the underlying public distributed ledger is really the star of the show here, since that is what makes the currency possible in the first place. Interestingly, all of this positive news has done little to affect the price of Bitcoin, which currently stands at $470.52. I would like to welcome to this week's episode of P2P Connects Us, David Schwartz, Chief Cryptographer at Ripple Labs. David, how did you get interested in peer-to-peer?
It was really Bitcoin that got me interested in peer-to-peer. A lot of people, it was the other way around. They were involved in peer-to-peer and they saw the financial aspect and the cryptocurrency, cryptographic payment as a fascinating application of peer-to-peer. It was more the other way around for me. I didn't really see the appeal of peer-to-peer for information that much. I wasn't like, there's a lot of people in this business who are in the torrent field, or who are things like Emule and Kazaa and so on. That wasn't the way I got into it. I got into it from the payment aspect. I was working on cryptographic systems for storage and for messaging. And I thought, wow, let's use this technology to, move money as easily as we move information. And that got me into the peer-to-peer aspect.
So how did you first get involved with Ripple Labs?
So I was working for a company that was doing secure messaging and secure cloud storage for government, military, and commercial customers. And I found out about Bitcoin, and I kind of was one of those people who immediately, as soon as I saw it, I realized that there's a good chance that that was going to be the future. And I was looking for something to do in that space professionally, if possible. And at the time, it was very hard to find a job that had anything to do with Bitcoin because it wasn't really settled or established. I guess to some extent, it's still hard today. And that's when I found Jed McCaleb, who had the idea of replacing mining with a distributed agreement protocol. And he offered me a job researching whether that could be done. And the rest is history.
In what way, then, is Ripple like Bitcoin? And in what way is Ripple different?
Well, it's the same in the sense that it's a distributed system that doesn't require a central authority, that resolves the double spend problem and permits people to hold and pay in digital assets. There are a lot of differences between Ripple and Bitcoin, but the biggest one, the two biggest is probably the use of consensus instead of proof of work. So it has a distributed agreement protocol that's faster than proof of work and doesn't require enormous amounts of computing power. And the other difference is the way we set it up as a platform for different assets. So Bitcoin is both a currency and a payment system, but the only thing you can pay in the payment system is the currency, unless you do things like colored coins, which is kind of like a workaround for that. Ripple was designed from the beginning to handle assets of all different kinds. So it was designed from the beginning to allow people to transact in Bitcoins or dollars or yuan or even the same currency from different issuers. So you might have multiple organizations that create electronic assets denominated in dollars, and Ripple is perfectly happy to allow people who use different issuers to be able to pay each other without a problem.
Yeah, from the perspective of an end user, I've definitely found Ripple's way of handling cross-currency transactions to be the most user-friendly. The pathfinding algorithm does an excellent job of letting me hold my preferred currency while being able to seamlessly pay someone else, even if they want a different currency. Now, you mentioned the consensus process as one of the main differentiators from Bitcoin, and Ripple Labs recently released an 8-page white paper which goes through the mathematical proofs showing exactly how consensus works and what some of the possible failure scenarios could look like. Can you explain some of the reasons for why Ripple consensus is superior to some of the other protocols out there that claim so-called Byzantine fault tolerance?
Well, one of the big reasons is that the system is designed so that if it can't assure you that its operation is reliable, it doesn't pretend that operation is reliable. So in other words, if in fact there is no consensus, that is not that difficult to detect because everybody signs their position. So if the network is in some sense broken, everybody will know it. And that means that the network can tell you that it's not able to operate reliably. By contrast, many other systems don't have that property. For example, Bitcoin had a ledger split. And when that ledger split occurred, there was no way to know that the Bitcoin system was broken because there's no real internal monitoring. Ripple fundamentally monitors its own progress. So the consensus process's job is to produce new ledgers on which there's very likely to be a consensus. The validation process ensures that there actually is a consensus. And the most important thing is that there is not the incentive to break the system like there is in Bitcoin. In Bitcoin, if you successfully execute a 51% attack, you can do a double spend. In Ripple, all of the attacks would just prevent the network from reaching consensus. If the network doesn't reach consensus, it can't confirm new transactions, which would be, of course, a problem. But it wouldn't allow somebody to do a double spend or to make money out of nowhere or to make money disappear. It wouldn't permit any of the attacks that we're really concerned about.
Looking through the white paper, there's a big emphasis on the difference between consensus between all validator nodes on the network and all the validators on a unique node list. Can you explain the purpose of this unique node list, or UNL, and the role it plays in the Ripple consensus process?
Sure. In an ideal world, it would be perfectly fine to select the participants in the distributed agreement algorithm randomly. The problem is a malicious entity could create millions of identities. And so if you selected the identities randomly, somebody who wanted to be malicious could in some sense dominate them just by creating an enormous number of identities. So what you need is some way of saying that the identities are not all belonging to the same entity. Because if you had collusion, if you had all of the identities owned by the same entity, then they could essentially pick and choose which transactions to allow into the consensus set. Now, they can't rewrite history, they can't make a double spend, they can't make money out of nowhere, but they could say, we're going to let this transaction through, but not this transaction, or they could stall progress in the network entirely just by refusing to come to a consensus. So the purpose of the UNL is to provide a sort of weak vouch that those identities are unlikely to collude because they belong to distinct entities. And one of the interesting things about the distributed agreement protocol is the way it's designed. You don't need all of everyone participating to have substantially the same UNL. You just need a very, very small amount of overlap. And the reason for that is the only way that you can get a fork is if one side decides to include a transaction that the other side decides to exclude. Now, assuming both sides are reasonable, if one side is completely unreasonable and completely broken, we don't care what they do. If people are broken, they're going to do bad things. But what we don't want is two reasonable sides of the network disagreeing over a transaction. That would be a real fork. And the only way that can happen is if there's some reason that transaction shouldn't be included. If there was no reason not to include the transaction, then both sides, being reasonable, would include it. And if there is any reason not to include a transaction, there's no harm in not including it. There's no harm whatsoever. If the transaction is still valid, it can just go in the next round. And so what we do is we bias the system towards excluding transactions if there's any dispute to prevent forks.
There's a quote in the white paper that I found helpful for understanding this property of Ripple consensus, which says, quote, "If the structure of the network is not click-like, a fork becomes much more difficult to achieve, unquote. So basically, even with multiple UNLs out there, there's likely to be enough overlap between all of them to ensure consensus. And if there's not, then it's not the end of the world, right? The algorithm just tries finding consensus again, which only takes like a few seconds.
So what happens is exactly that. So if you have the case where you have two sort of well-connected clusters that are poorly connected between those two clusters, and one cluster is going to say yes on a transaction, and the other cluster is going to say no on the transaction, the servers that are in both clusters are going to appear to be obstinate. They're going to be like, as far as the nodes on the yes side are thinking, they're like, everybody says yes, why is this guy saying no? And on the other side, saying everybody's saying no, why is this guy saying yes? Now, if the system was sort of equally biased towards yes and no, there'd be no solution. But the system is heavily biased towards no. So what happens is the servers on the yes side basically say, I think this transaction should be included, but there's a few servers stubbornly refusing to include it. So to ensure there's no fork, I'll just switch my position to no. And that's triggered by a timer based on observed parameters. So it's not a fixed, it's not like 2 seconds or 3 seconds. It's based on timing measured in the previous consensus round. So it's like this consensus round is taking unusually long. There's probably some sort of a split developing. Let's just exclude the disputed transaction and everybody will vote to include it next round. There should be no reason for the dispute to continue. And that's exactly how the Ripple network resolves those type of splits.
So one of the main criticisms I've seen of Ripple is that there's explicit trust involved, which seems to violate the mantra of trustlessness that Satoshi and many of his supporters are adamant about. But it also seems that with Ripple, you're able to add a small amount of trust or pseudo trust and gain huge efficiency advantages. I've always found this dynamic really fascinating given how costly it is to maintain a trustless environment in Bitcoin and other cryptocurrencies.
Well, I would argue that existing systems like Bitcoin still have that same trust. You just have less control over it. Because you're implicitly trusting that 51% of the hashing power won't collude. And that's proven to be sufficient. We have no reason to think that that's a problem. I mean, there are people who worry about it, but we've noticed that when we got close to 51%, social pressures were sufficient to prevent any kind of problem. You can think of consensus as very, very similar to mining. We didn't think about this at the time, but in retrospect, it's kind of like a form of proof of stake. You can think of having a validator that's on other people's UNLs as a form of stake. And the more stake you have in that sense, the more control you have over the consensus process. But one big difference between consensus and either proof of work or traditional proof of stake is that's completely dynamic. So if there was a particular participant that was behaving maliciously, and remember, you have to sign everything that you do. That's the reason people listen to you, is because it's signed with an identity they've trusted. So if you behave in any way malicious, people can just stop trusting you. It would almost be like if we discovered there was a double spend, we could like go to that pool and destroy their mining equipment, except it would be legal, right? And it would be what we're supposed to do. So I would argue that if we can't get it right when we have complete control, and in a distributed way, remember, there's no one entity that decides what goes on the URL. It's essentially everybody gets to choose who. It's almost like in Bitcoin, if everybody got to choose who they considered, a good miner. If we can't get it right under those conditions, then I would say we can't get it right under any conditions. That's like the best case scenario.
So basically it would take a collusion of over 80% of the validators to do any real damage then. Over 20% to block consensus, but over 80% to effectively fork the network and try to create a new consensus.
Yeah. And then, of course, you could just refuse to go along with any rewrite of history. So Ripple does have path dependence, unlike Bitcoin. Bitcoin has no path dependence. Whatever happens to be the longest path right now is valid. In Ripple, servers observe things that happen, and they have no need to permit somebody to rewrite the path. So if the majority of the network is already committed to a particular ledger, there's no reason to allow them to, let's say, switch to a ledger that undoes that. And so long as people don't agree to do that, as long as a majority doesn't go in that direction, then everybody else will be forced to keep their commitments. So Bitcoin has no path dependence, but in exchange, the past is just as malleable as the future. Ripple has path dependence, but in exchange, the path you don't have to allow the past to be changed. If you observe something to happen, there's no reason that you need to let it unhappen. And one other difference that creates is that Ripple has a threshold. There's a certain point in the past, but before which we know everything for certain, and after which everything is speculative. So essentially, the consensus process is working into the sort of unknown future, and then the validation process is advancing the past point at which we know everything has happened. It's actually a very interesting process. So servers can disagree on what's happening right now, and they can disagree on what's going to happen in the future, but they have to agree on what's happened in the past because they've all already observed the same information. You don't have any of the problems of latency or out of order. When we're talking about what happened in the past, there can be definitive agreement. So that's kind of how we solve the Byzantine generals problem.
Is the process for weeding out rogue nodes who might be purposefully trying to disrupt the network automated? Are they automatically detected and removed after so many attempts at disruption?
We have not automated it yet, and I'll tell you why. So one of the reasons why you don't want to do that is because you don't want to create a scenario where somebody can make honest nodes appear malicious. Other people stop trusting the honest nodes, and then the malicious nodes have a greater percentage. In other words, it could make attacks easier if you're not careful. But that is definitely something that could be done in the future. So you could imagine, let's say you have a transaction that's perfectly valid, and some server stubbornly refuses to include it. And that server has a pattern of stubbornly refusing to include transactions where there's clearly no reason for it not to include it. We could say dynamically and automatically, I'm going to stop trusting that server, or I'm going to temporarily reduce my trust in it. And in the future, we may do things like that. But the concern is that you don't create new attack models where you make honest servers appear dishonest and thereby squelch their voice. So that could be done in the future, but you have to very carefully make sure that you don't create new attack models.
Very true, very true. Thank you for that excellent explanation of the technical details of the Ripple protocol. Ripple's consensus algorithm was one of the aspects that really caught my attention, and I'm glad to see others looking at it more closely after the release of this white paper. Now that we've covered some of the technical aspects of Ripple, can you tell us about Ripple Labs, the company developing the protocol? What is the company's vision for Ripple's place in the world?
Well, our long-term vision is for Ripple to allow value to move like information moves today, to have a universal value web accessible to everybody that makes payments and currency conversions smooth, easy, low cost, reliable. Right now, we're kind of in the infrastructure phase. We need to get liquidity. We need cross-currency liquidity to be there. We need gateways. We need financial institutions, and so we've been working very aggressively on that front. We're trying to make the developer experience better, figuring out what near-term businesses are the best use cases. Remittance is a great example. Most people understand that remittance is broken, and it's a very good use case for Ripple. We don't see Ripple and Bitcoin as competitive. We see them as complementary. Bitcoin is a great store of value. It's not a great payment system because of the slow confirmation times and because of the transaction speed limits, because of the block size. But it's a great store of value, and there's no reason that the store of value and the payment system have to be the same. That was kind of a design decision in Bitcoin, but certainly not the case in Ripple. Ripple's used today to make lots of Bitcoin payments and for people to buy and sell Bitcoins. So we're just trying to grow the ecosystem, find the low-hanging fruit, the best business models, and push those as hard as we can, and cooperate with developers who want to build other things. And we definitely want developers to build whatever they think is right, immediately. There's nothing to wait for. But basically, we just want to grow it.
So in addition to the more traditional uses that you just mentioned, such as remittances and cross-currency transactions, what are some of the more innovative uses for the Ripple protocol that you've seen proposed either internally or from the community?
Well, the most innovative use is the reason it's called Ripple. Ryan Fugger's original vision for money created out of social relationships. We're a long way from doing that, but his vision was that if you did a favor for a friend and the friend sort of owed you one, that they could track that in a system and that could be used as a currency. And the only reasons why that doesn't scale are all solvable. Like, one of the reasons why that doesn't scale is, what if you're interacting with someone who doesn't know you or doesn't know anyone you know? Well, computers are very good at tracking past transactions, balances, future transactions. They can find out your reputation. All of those problems are solved. So interestingly enough, we could actually take a giant step backwards from one uniform standard of money to an enormous number of varying types of money that arise out of social situations with liquidity between them, where they were actually liquid assets that you could pay your bills with or get paid in.
Yeah, I think that's honestly one of the most exciting potential use cases myself. I made a video which people can find on my blog showing how Ripple can be used to create such a mutual or social credit system where credit is essentially created interest-free based on your social network's belief that you'll be able to provide value in the future. It's an incredibly simple yet powerful concept.
Yeah, and if you look at the way things have changed recently, if you look at things like Facebook and Twitter, you'll notice that people are much more open about who they are and what they're doing and who their friends are than they used to be in the past. And the one thing that people still are not open about is finances. So if you needed some money to buy groceries, you might put it on a credit card or get a payday loan. You wouldn't go to your friends and say, "Hey, can I borrow $50? I'm a little short and I don't get paid until Wednesday," or whatever. That's not a good system. It would be better if friends could extend credit to each other and could create a value network that enriches all of them. And the technology is there to do that. People just have to be a little bit more open than they are now. So that's one possible future, and Ripple has all the technology necessary to make that happen today. It's just a matter of seeing whether people actually use it that way.
You know, one of the most unique aspects of Ripple that I've always admired is this ability to express trust at the protocol level. And of course, intimately tied with trust is the concept of identity, or who you are trusting and creating relationships with. I recently signed up for a Ripple name and have seen some hints on the Ripple wiki that Ripple could have identity baked into the protocol as well. Can you talk about the plans there?
Yeah. So we're not a government organization. We're not an enforcement organization. We can't make people do anything. But we want to make it possible for people to manage their identity in a way that's flexible and that keeps them in control. And so one of the things that happens right now is when you have cases where there are anti-money laundering or know your customer type regulations, you wind up sending all of your identity information to everybody who needs it. So if you're going to use a particular Bitcoin exchange or a particular payment system, they want all of this information from you, and then they store that information somewhere, and then you use the system. And it's a cost center for them because they have to verify that information. I mean, imagine you were starting a Bitcoin exchange. Are you going to have people send you their passport scans? Like, what are you going to do with them? Are you going to look at them and say, "Oh, that seems fine to me. It looks like a passport"? I mean, the existing system is very broken. It's very divided. It's a cost center for businesses. Nobody knows how to do it right, certainly on the small business side. The larger businesses, we hope, are doing it right, but we don't know. We certainly have heard about hacks from companies that haven't been able to protect the identity information that they're holding. And it's easy to understand why that would be difficult for them. They don't want to hold that identity information. The system forces them to. So what we're trying to build is a distributed identity system where identity could be verified by entities that were trusted to do so and who make it their business to do so. And then you could selectively share your identity with people you do business with, or more likely just essentially tell them that your identity has already been shared with an identity provider. And that way the people who do business with you know that if there's, let's say, a subpoena or some need for your identity that's legitimate, it can be obtained. So we're trying to build that kind of distributed, decentralized, flexible system, keeps the users in control, and allows companies that need KYC or AML type information to not have to store that information, not have to secure it, and just be able to know that someone is doing that who makes a business out of it.
Has Ripple Labs looked at any techniques such as zero-knowledge proofs or other kinds of advanced cryptographic methods that people can use to selectively reveal personal data, or perhaps, not actually have to reveal any data at all?
So we haven't looked at anything quite as sophisticated as zero knowledge proofs. We haven't really seen any need for them. But we have looked at things like where a person can give you a blob that's encrypted and can only be decrypted by the identity provider. So if I use a particular company as an identity provider and you have a legitimate need for my identity, I just present you a blob that you can't compare or analyze that blob, but you can verify that that blob corresponds to an identity issued by a provider that you know is accepted in your jurisdiction, let's say. So in that way, if there's never any need for the identity, if there's never any legal process or there's never any investigation or anything, all you know is that the person proved their identity to a particular identity provider.
How receptive have regulators been to this idea? Does a paradigm where businesses trust identity verification services without having to actually see the documents make sense to them? Or is there resistance in favor of everybody just collecting everything?
So we found that there's kind of two approaches that you can take with regulators. So one of them is that you can argue that you technically comply with the law but don't give regulators what they need, or you can give regulators precisely what they actually need and then convince them that that complies with the law, or talk to them about adjusting the law as necessary. The second approach is by far the better approach. If you give regulators what they actually need, and they have legitimate concerns, right? I mean, financing terrorism is a real problem. And if you allow them to do their jobs, they'll allow you to do yours. So we've had very good luck and I mean, I'm kind of a libertarian at heart, and I would have expected the government to at worst be openly hostile and at worst be completely indifferent and immobile. And actually, at least in most of the countries, like certainly in the United States, we've seen the complete reverse. The regulators think that this type of technology is fascinating. They know that it's the future. They know that the current system is broken in many ways and cuts out a lot of people. And they're very, very receptive to better ways for them to do their job and better ways for the economy to work. I'm honestly quite surprised.
Do you think Ripple's identity system could help people in less developed parts of the world where social or government infrastructure around identity simply isn't there? Places like Somalia, for instance, where remittances from the diaspora have been all but shut down completely due to a lack of regulatory framework?
I certainly hope so. I mean, that's definitely one of the problems that we as a company really acutely understand and want to address. The idea that in some parts of the world it is extremely difficult, if not impossible, to open a banking account, and that access to the financial system is, I mean, access to credit and access to payment systems is extremely important to economic growth and to pulling people out of poverty. We definitely see that. And identity is definitely one of the things that we hope will make that better. It's a little bit of a harder problem when you have somebody who lives in an area where it's very, very difficult for them to prove their identity. But what's nice is right now, most of the ways that they could prove their identity are through the government. This would make possible independent identity providers. And as long as they met the requirements that other businesses in other countries need, there's no reason that those identity providers wouldn't be recognized.
And I suppose if all else fails, members of the diaspora will be able to deposit local currency at a gateway and remit XRP, which can then be sold at the spot price locally wherever the remittance is being sent to.
Yeah, or other similar assets that are issued by companies in countries that don't have, draconian rules. So you may also see competition among countries to operate gateways. You might see that type of innovation and competition happening. The idea is to remove the barriers so that if there's a market, people can service it. I don't think every transaction, is going to need the level of verification that the U.S. government might require of U.S. Bitcoin transfers. So Chris Larson, our CEO, has been creating a charity specifically to help bring Ripple to people who are underbanked and unbanked, and they're working on exactly those types of challenges.
So, given all of the developments that we've covered so far, what are the next priorities for Ripple Labs?
So our priorities right now, obviously the stability and reliability of the network is always going to be a top priority, and ensuring that it continues to operate reliably. And our long-term push to increase the decentralization of the network and get it to be as distributed as possible, encouraging more participants, more stakeholders. In terms of technical development, we've been working on M of N multi-signatures so that you can store funds more securely, and Codius, our contract implementation. The big thing about Codius is that changing the Ripple network's transaction processing rules is a big deal. It affects everybody because that's a distributed public resource. But Codius contracts, you can make your own Codius contract as complex as as people are willing to execute. You don't have to impose load on everybody. So that's going to make the network much more flexible without those kinds of trade-offs. As far as what we're looking for from the community, what we want is people to bring use cases, people to come up with problems that Ripple solves and use Ripple to solve them. We love when people do that. We love when people develop, in-app payment systems, credit card integration, ways for people to get paid paid and have their money go in their Ripple wallet, or easy ways to move different currencies. We'd love to see any kind of innovation. Our priorities right now are largely on financial institution integration, getting more liquidity into the network, getting more market making, getting more gateways so it's easier to get cash in and out. But that doesn't mean that we don't, want to see other things happen. We want developers to work on whatever they think is interesting, and we'll support them whatever way we can.
All good things. Well, I'd like to thank you, David, for taking the time to come on the show today. If you have anything left to say, the floor is yours.
Well, thank you for giving me this opportunity. It's a pleasure talking to you. We have a forum. We have a variety of email addresses. If you're looking for a job in the cryptocurrency field, we're hiring for all kinds of positions. Check out our website. And please, if you have any ideas for things that you want to do with Ripple, if you're a developer, contact Ripple Labs. We'll help you whatever way we can. We want to see new and exciting developments.
And that URL is ripple.com. Thanks again, David, for coming on the show. Take care.
My pleasure. Anytime, John.
Thanks for listening to this week's episode of P2P Connects Us. If you have any comments or questions, you can reach me through the contact page on my website at p2pconnects.us. Till next time.